for joining me once again. My name is Ola Ibiwoye of Commercial Property Club podcast. Today is another pod chapter episode in which we dive deep into income-producing property, asset classes like apartments, senior living, retail, warehouses, and also medical buildings. We believe knowledge is valuable when it comes to investing in income-producing property. That's why we thrive in bringing experts in the service industry, as well as performing, also practicing deal makers in the industry. Because through experience, through their knowledge base, we believe we can add value to people out there. And today is not any different from what we've been doing here on Commercial Property Club podcast. Today, I have with me a seasoned man in the industry, somebody that has really done it over the years, and a seasoned entrepreneur also too, with diverse experience in diverse fields. But today we're focusing more on the income producing aspect of things, which is the apartment sector. That's the niche he's focused on. Today have the august privilege and honor to bring on board Gary Lipsky, and he is the president and the CEO of Break of the Day Capital. I'm going to talk a little bit about Break of the Day Capital before I dive into the biography of Gary today. Break of the Day Capital, really what they do is they're focused on passive real estate investment, both for accredited investors as well as sophisticated investors. They help protect big legacy in terms of building of wealth. They have core values that are deeply rooted in the integrity, transparency, as well as communication. They're not left out without due diligence when it comes to their core value. They provide investors with opportunities that earn cash flow, equity appreciation, and tax advantages while carefully safeguarding their capital, which is very important. They also focus in acquiring specifically underperforming multifamily properties in high-growth market, mostly in the southwest aspect of things in the United States of America. They implement strong repositioning strategies. That's very important, and they maximize value for stakeholders, people that partner with them. That's what I mean by stakeholders. And in the Break of the Day Capital is actually led by a man, which I already mentioned his name, Gary Lipsky. Gary has real estate investment knowledge in all this area. He's been in real estate since 2002. He's invested in well over 3,000 units of apartment. Under asset management right now, they're grossing well over $250 million. Talking about really playing in the asset class apartment. They've done it. Gary is a successful real estate investor, and also particularly as talk about the niche in which he's focused on, and which his group is focused on, which is the C-Class Value-Add aspect of thing. And also too, like I said, he's a man with diverse caps on. He has his own podcast, which is the Real Estate Investor Podcast. Is co-authored in the book that is best-selling out there. I'm going to give him time to talk about that at the end of the show. And also, too, he has been giving back to the community. I would also give him the room to talk about that, because I believe in giving back. This man has done it. Way back, he's built a started company that has added value to well over 9,000 students in the south side of California. The Core Educational Services is what I'm referring to. Is a nonprofit organization that is also taking part of, which I would obviously want him to elaborate more at the end of the show, because we believe as investors also in giving back. And this is one of the privilege I have to have somebody on board today that has given back to the state of California. And I have no doubt he's going to talk about that. But we will dive in deep today, particularly in the aspect of apartment investing. And without no further delay, I have the great privilege to bring on board to my show today, Gary Lipsky. Gary, I say hello to my audience.
Hello, thanks for having me. It's a pleasure to be on.
Awesome, awesome. Today it's going to be a great show, and I have no doubt the value that you bring to the table today. And we would look forward to just having a wonderful show. You know, earlier on I was alluding to the fact that the topic we have today is how to focus and deliver quality apartment property with great returns for investors, which I have no doubt that you've done, and you've done it over and over again, because it's not easy to acquire well over $3,000 under asset management right now. So, but before we go into the deep confines of things, I usually will ask, how did Gary start in real estate?
Well, you know, I've been an entrepreneur since I was in high school, and I had that fever for it, the fever and bug for it. I always worked for myself for the most part, and so I was developing those skills at a young age. I owned a restaurant delivery service in college, kind of like a DoorDash and a Postmates that they have now. I co-produced 3 independent films in my 20s. I ran that. I started that after-school outdoor ed and leadership development company. But it was always about providing a good home and resources for my daughters, and I started investing in 2002 in real estate, and wanted to really go full bore into that. But it was always having a vision and knowing the numbers and trying to create more wealth, trying to build your net worth over time. And it's not, I know a lot of people jump into real estate to get rich quick, and that's not a way to do it. You can get rich over time by putting in the work. Like anything else, you put in the work, you're going to get results. And having that trying to achieve financial freedom was something I was going for.
Awesome. It's amazing you're talking about the fact that you have to put in the work. The truth is that no great system, no great value out there in terms of building wealth or building anything of significance can actually materialize without showing up, putting in the work, and over time you begin to see results. I'm glad you talked about that. And talking about the way you've done it over the years in the apartment sector, how do you position yourself as an apartment syndicator for quality deal flow?
Yeah. So we focus on a few markets. We're not chasing deals all over the country. And with that, we can be experts in those markets. So brokers see you consistently over the years, and you develop a relationship with them. You really understand the market, and they know you're a player. You delivered. When you buy a property, you make it a smooth transaction, and they'll keep coming back to you. So it's like I said, putting in that work, and your investor base is gonna keep growing. You communicate with them well. You're transparent. And same thing as when you're buying a deal, working with the brokers, the lenders, all these pieces. If you're doing it the right way, your business will continue to grow over time, and eventually will snowball because you're just picking up more and more speed.
Awesome. Talking about speed in terms of business details, you've done it repeatedly. Have you been to the closing table several times? You've done it, been to the closing table several times. When you close on a project, the cycle of that apartment investment begins from that closing table. Take us through a typical cycle with a deal.
Yeah, you'll see a lot of people on social media talk about when they close a deal, but that's really when the work begins. It's exciting to close on a deal. It's hard work getting all the pieces in order, but now for me it's the fun part. It's it's typically rebranding a property. So, for one property, it was called La Casa. We changed it to the name to East 3434 because we wanted a more diverse name for that property and not one just targeted towards one demographic. And then we would typically improve the landscaping and paint the property, maybe add an amenity or two, like a dog park or a playground or a barbecue area. Things that don't necessarily have to cost a lot of money, but it's letting the residents know that we really care about them because we want to create a win-win scenario for our residents and for our investors. And then we're going to work on unit renovations. Typically, we bring on a new property management company for that property that's going to be pushing rents because we want to be at market rate and provide more quality for the people that live there. So a lot of our residents end up staying because and still pay the increased rent because they see a lot more value at our properties than they can get somewhere else. And it's doing resident events and as we go, we're solving problems because nothing goes perfectly. So whatever's thrown our way, there are times when occupancy may dip or you have turnover or you have plumbing issues. These are normal things that happen over the course of a cycle, but you're always problem solving. You have your consistent weekly calls to work through those problems, and sometimes you don't have any problems, which is fantastic. I wish we never have any problems, but that's not realistic. And then over time, you're constantly monitoring the value of your property by talking to other brokers, and you seize the right time to sell it based on if you have loan prepayment penalties, where the market is. You have to evaluate all these different factors to maximize the return to your investors.
Awesome. You're talking about the aspect of creating value over time, and not only creating value in the aspect of the property but also ultimately, secondarily, bringing value to your occupants also too, because people can see value and they're willing to probably pay more. If that's what you just talked about. Ultimately, the work starts when you close. Really, a lot of people don't realize that, but the work really starts when you close the property and dig deep. And talking about quality, we're talking about quality apartment investments right now. What you do as an operator, also as an owner, also too. Pros and cons of quality apartment asset base versus quantity apartment asset base. I know you can talk more on that. Quality versus quantity. What are the pros and cons?
Yeah, well, we're not going to be the biggest buyers out there. We're not going to pay the highest price. We're not, when we talk about our goals, we don't talk about getting $1 billion of assets under management. We will get there, but it's about quality. So I'd rather do 4 really good deals a year than 12 mediocre deals. That'll pay off for investors, and we'd rather have focused time. We're not trying to have the most units under our name or the biggest dollar signs. That's not what we're about. We could do very well for investors and very well for ourselves if we just focus on let's say 4 to 6 assets a year that are high quality. We don't need to have 100 people working for us or 200 people working for us. That's not what we're about. And so our time is focused on the amount of deals we have and just the managing of deals as well, versus like I said, if we had 12, 15, 20 deals, we're not a sausage factory. We're trying to do really good work.
Awesome. And that quality obviously trumps quantity. But some people would rather say, okay, let's do the quantity. Now, you talked about your investors. How is that translated in terms of satisfaction when it comes to your investors?
Absolutely. our investors know that that we're focused on quality versus quantity, and so we haven't done a deal in 7 months. I'd love to do a deal. We've been underwriting tons of deals, but we are 10-15% under what the seller is willing to sell it for, and so we'll just remain patient. And our investors keep coming back each time, and they bring a friend because they know they're going to get quality. We've always delivered. When we have struggles, we communicate those struggles and we come up with solutions to solve them. Like I said before, nothing runs perfectly. We all have some ups and downs, and things break. And so it's consistently problem solving and being proactive. And that is a huge differentiator between someone that is just kind of waiting for things to happen and isn't really on top of it. They're going to have a huge hole to dig out of, and they're not going to be able to get the extra returns that we're able to get for our investors because we put in the work.
Awesome. It's invariably important to really bring that satisfaction to investors, because practically everything it's interwoven. Talking about managing the apartments, also to making the yields that you typically promise investors, and that's very important. I can imagine that. So, but how do you manage your apartment investment portfolio? Knowing fully well that you have quite a bit of asset under management right now. How do you manage apartment investment portfolios?
Yeah, so we have an asset manager, and we do our KPIs. We look at, we have our weekly calls. We have a Google tracker for each property, and so we could see where we stand at every single week. We have a task list so that it holds people accountable, so they know, it's got their name, the date, when the project is due, any notes. Everything is tracked so we could fix any bottlenecks if they occur. Why is it taking 6 weeks to get a unit renovated? That should not happen. So where's the bottleneck? Did we order the kit, weeks before that apartment unit became available? Are the staff ready to work on it as soon as someone moves out? We're constantly monitoring, breaking everything down to make better decisions on our properties. And so, I have someone that handles it on a day-to-day basis, and then I'll attend the weekly meetings. We'll go through it on a weekly basis ourselves, seeing where areas of needs improving, because we're always constantly looking to improve, constantly looking to increase the NOI on the properties, and that's how we that manage everything.
Awesome. It's imperative to really focus on the management of the asset, because practically that's what actually produces the cash flow, as well as ultimately accumulates the appreciation. And you just highlighted the various divisions that you keep an eye on. You as the leader, how important is it when it comes to leadership in managing all of this? How important is it for a leader to just do the right thing? How important?
It's incredibly important. One, I have to set expectations from day one for my staff, for the property management team, because if you don't set expectations, no one knows what they're shooting for. So we set really high expectations, and then we empower all of my team on site, in the office, to have ownership thinking. I don't want any of my team to punch in and punch out. It's not 9 to 5. I want them to go that extra mile. And when they know that their decisions and input matter, they'll do that. They'll go, they'll make extra efforts to make sure everything is running right from an operations standpoint, from an on-site standpoint. So I'm constantly visiting my properties on a consistent basis and thanking this team and showing appreciation, because they're doing the hard work on a consistent basis. And property management can be a bit of a thankless job. You only get the complaints, you don't necessarily get the thanks. And so keeping that in mind is really, really important.
Wow. So in the upper echelon of leadership, you must hold people accountable yet again, give people appreciation in the line of your workforce. Huh? Absolutely wonderful, wonderful. Now, dealing with several kinds of investors out there, and over your travels, you've met with sophisticated, accredited, what have you out there? Why would you say apartment is the in thing? Why invest in apartment as an investor?
Yeah, I mean, for apartments, there's many reasons. One, it's a real asset. You know, it doesn't drop 25% in value because Elon Musk puts out a tweet. I can force appreciation, so I could take a property and fix it up, increase rents. I could improve the NOI 50%. I could double it and create real value out of it without worrying about fluctuating stock prices. I get tax benefits too. We do a cost segregation on our properties, and typically, if in the past you could invest 100,000 and get maybe $80,000 loss in a K1 year one, which is fantastic. That it's going to go down over the next few years because of the law, but regardless, it's still a great tax mitigator. You can also 1031 it into another deal. And real estate holds its value and appreciates over time. So to me, it's one of the most perfect investments out there. And I put all of my money for the most part in my deals because they performed, and I truly believe it's a great way to build wealth.
Awesome. The tangibility of real estate, you can compare. You really cannot subvert the value of that, really. So how do you've come to know some markets out there, maybe several of them. How do you choose the right markets for your apartment investing with your group?
Yeah, there's a lot of people out there with different theses, and that works. There's people that invest in LA. I don't. I don't want to be a landlord in LA. My thesis is I want to invest in high growth markets with low cost of living. So Phoenix and Tucson have been our markets that we've been very focused on. They have a very diverse job market, population growth, job growth, rent growth, and like I said, low cost of living. So I've got tailwinds that are helping my properties increase in value because of all these different factors. That's what I have focused on. But I think there's opportunity everywhere. It's just a matter of how you underwrite the deal.
Well, it's funny enough. You lived and grew up in California, but yet again you chose to go to other markets to invest in, practically, just like you rightly said. It depends on the factors, what you're looking for, what kind of cash flow you're looking for, what kind of appreciations you're looking for, and we all know different markets provide that. For what it is. For California has its own kind of side of things, actually. So now, when you look at things right now, the way the hikes and rates are, the inflation in the offering right now, what is the outlook right now for apartment syndication for 2023? What is the outlook?
Yeah, we're bullish. We're looking to buy. We're not looking to sell. We'll sell when the markets are frothy. To me, it's a great time to buy at a discount. Now, certainly you have higher debt and less leverage, but that's fine. We just change our underwriting to meet the current market situation. So we feel like we can buy on a big discount right now and take advantage of that. Certainly, like I said before, we've been a bit short on seller expectations as far as what they're looking to get if they sell, but eventually we'll land on one, and we feel very good about the long-term viability of anything that we buy.
Okay, great. So would you say it's a seller's market or a buyer's market right now? Predominantly. I know it could be.
Yeah, I think it's a buyer's market right now. It's just there's just not a lot of deals out there because sellers don't want to sell. But sellers will have to sell soon because of the debt burden that they face, and a lot of deals will be coming up per their loan. So it'll be interesting times. I don't think there'll just be a wave of opportunity, but as we get further into 2023 and certainly 2024, there'll be more and more deal flow. There's a lot of dry powder sitting on the sidelines. So there's this kind of, figuring out between buyers and sellers where the right price is. And so we'll get there. But it's just been kind of a wait and see. And there's a lot of media out there that's, waiting for this housing market to drop drastically. And I don't feel that that's going to be a problem. Where 5 million housing units short in the U.S. Every market is different, but there's still a lot of places that lack enough housing, so it's going to drive up prices and rent growth, and not the crazy rent growth that we had the last couple of years, but still nice steady rent growth. And there's just investors can do very, very well. It might not be where they're doubling their money in 2 years like we've done on a few deals that we've sold, but our typical underwriting is we'll look to double your money in 5 years, and that's still very, very good.
Awesome. So it's like a waiting game right now, in which who's gonna budge first in some aspect of things. I believe so too, that it's sort of a buyer's market. It's just that sellers are right now they're kind of like waiting it out a little bit, so. And when it comes to the aspect of raising a winning team, because it takes a team to do what you're doing. How did you gather your team in your syndication business?
Yeah. It takes time. You obviously, it doesn't happen overnight. Yeah. My operations person has been with me for over 2.5 years. Then we hired an acquisitions and an asset manager. I brought on a director of investor relations almost 7 months ago, and then someone that does special projects. So you develop a team over time, and you continue to grow if you add more assets. Culture is very important, and working together, like you said, real estate is a team sport. And we'll also partner with some other people too that maybe they bring capital to the deal or something else to the deal as well. So as you get into bigger deals, then you need to partner with other sponsors. So you've got to, when we talk about partners too, where, you having a good lender or loan broker or a good lawyer, it's a whole team behind the scenes too that are helping you move a deal forward, and having people that you can rely on and know, like, and trust is huge.
Yeah, absolutely. There's no circumventing the need for a good team that surrounds the syndication business. From experience, I know, just like you rightly said, you need a good security attorney, you need a real estate lawyer, you need some people, even as what you would say non-significant to some orders, as a title officer that can help you, and so many puzzles come together to make it work, and it's important that you gather your team. Your nonprofit, I really, I was looking at what you've really done for the youths in California. I want you to talk about your nonprofit a little bit, before.
So we started
before we wrap up.
Yeah, we started in 2006. We ran it for about 15 years. We recently shut it down, I think like 2 years ago. Unfortunately, we were that small nonprofit that, we got like 150,000 from State Farm for an anti-texting campaign. We were money from the Laker Foundation, lots of local foundations, but we were very small to survive, over time. And eventually the team felt that it was just too hard to keep going, because you either have to grow to a certain amount or go away. But we ran it for over 15 years. We had some great success. One of my favorite programs was working with kids. We did a rock climbing program. So we taught them life skills through a rock climbing program, and we taught them how to belay and put people into harnesses, and they ran that as a business for one event where they marketed it and brought advertised and got kids to come and pay for to go rock climbing, and then the kids ran the program, which was really cool. And we did some food equity programs as well. So really had a nice impact on many youth in the Southern California area, and so very proud of that work.
Awesome. Giving back is very important, and in whatever capacity you can give back to the community. I'm a firm believer of that also too. So thank you for what you did for Southern California and your give back program, nonprofit also too. As entrepreneurs, that's one aspect of our department that we need to focus on also too. So for your company, your group, how do people get across to you, talk about your podcast, and how do investors reach you? People that want to partner with you, like your products, how would they reach you? Just talk about that before we wrap up.
So the best place to go is our website, breakofdaycapital.com, and you could find links to my Amazon bestselling book, Best in Class, about asset management, our podcast, Real Estate Investor Podcast, and you could also find that on iTunes and Stitcher. If you go to our website, you could sign up for our newsletter. We also have resources available. There's an investment tracker there, how to vet a sponsor. We also have an ebook on real estate investing made easy. So lots of great resources. You could set up a call to talk to us and be a potential investor for the future. So definitely go to our website and follow us on social media.
Awesome. Gary, thank you so much today for joining us on Commercial Property Club podcast. As you've all heard from Gary today, how to deliver good product when it comes to partner syndication is giving us a ton of value today. If you want to reach him, he just told you how to reach him right now. Please reach out to him. Once again, we bring value here at Commercial Property Club podcast, and ultimately that's what we did today with an expert, somebody that has done over the years. And we'll continue to do that here on Commercial Property Club podcast. It's another day of our pod chapter. Thank you for joining us today. And we'll say thank you once again to Gary. Will be wonderful having you some other time to dig deep into the confines of the niche apartment. Okay, thank you so much. I will see you some other time. Once again, my name is Ola Ibiwoye of Commercial Property Club podcast. Thank you for joining us today.